Ever wondered what and how financial market works? Hello everyone. Welcome to HCB Global Academy. Our course is about fundamentals of financial market. Financial resources are vital in every company. This is considered as the company's lifeblood. These resources can be generated in different ways, media, and system. Financial management is a key branch of management that enable the company to improve its monetary resources in different forms to attain two broad goals: profit maximization and wealth maximization. It is important that we understand an important venue where these types of wealth were generated. This venue is what shall we delving, the so-called the financial market.
In this chapter, we shall discuss about financial system and financial market. This chapter is about the financial system, elements of financial system, financial market and types of financial market.
Understanding the financial system requires knowing the sources of wealth, which can be generated through various means. Initially, individuals rely on family support for basic needs. Education lays the foundation, leading to employment and getting salaries or wages through labor. Earnings enable savings by getting interest from deposits or capital, and then asset acquisition, such as land, generates wealth via rent or business use. With profitable ventures, individuals become investors, infusing capital for higher returns or profit through entrepreneurship. Successful ventures may transition investors into entrepreneurs, fostering growth and profit accumulation. Diversification and expansion sustain the cycle, integrating finance into the business system.
Financial system allows households, companies and the government who have available funds to invest these funds in more potentially productive vehicles that can result in faster growth in the economy. The financial system encourages fund savings from its stakeholders and transform these savings efficiently into investment vehicles that help the economy grow faster. To cite another good definition of financial system, according to 4A, AP, financial system is a set of arrangements or conventions embracing the lending and borrowing of funds by non-financial economic units and the intermediation of this function by financial intermediaries in order to facilitate the transfer of funds, to create additional money when required, and to create markets in debt and equity instruments, and their derivatives, so that the price and allocation of funds are determined efficiently. Financial system is composed of network of interrelated systems of financial markets, intermediaries and services. The financial system of a country carries out the essential economic function that transfers funds from parties that have available funds to parties that need funds. In a country, there are households, companies and government agencies who have available funds because they spend less than their income. Essentially, these are the fund providers. On the other hand, there are also households, companies and government agencies that have fund shortage because of deciding to spend more than their income. These are the fund demanders. Matching the difference in spending, excess funds from one party to the fund gap of another party, is the main reason for the existence of a financial system. The financial system permits an efficient method to move funds between entities who have funds and entities who need funds.
As you may have noticed, funds can flow from lender-savers to the borrower-spenders in two routes: via direct financing or indirect financing. In direct financing route, the borrower-spenders borrow and deal directly with lenders through selling financial instruments, or securities. Financial instruments represent claims on the future income or assets of the borrower. Borrowers recognize financial instruments as liabilities while lenders recognize these as an asset. Buying stocks directly from a company is also considered as direct financing. In the indirect financing route, the borrowing activity between both parties still happens, though indirectly through the intervention of a financial intermediary. So the difference between the two routes is financial intermediaries. There are 7 essential elements that make up a country's financial system. These 7 elements include 1. Lenders and borrowers, 2. Financial intermediaries, 3. Financial instruments, 4. Financial markets, 5. Regulatory environment, 6. Money creation, and lastly 7. Price discovery. Lenders supply funds, while borrowers demand them for investment. Intermediaries bridge the gap between them, facilitating transactions. Financial instruments represent contractual obligations, traded in markets like money and capital markets. Regulation ensures compliance, typically managed by central banks. Money creation occurs through financial flows, enhancing economic activity. Price discovery determines instrument value based on risk. These elements synergize to fuel economic growth and ensure financial stability, forming the backbone of a nation's financial infrastructure.
So let's discuss the financial markets. Financial market refers to channels or places where funds and financial instruments such as stocks, bonds and other securities are exchanged between willing individuals and/or entities. This also includes the existing mechanisms and conventions to facilitate transfer of funds and/or financial instruments between market participants. Financial markets intend to establish a consistent, efficient and cost-effective bridge between fund providers and fund demanders. Participants in the financial markets include ultimate lenders and borrowers such as household, government and businesses, financial intermediaries, broker and dealers, regulators, fund managers and financial exchanges.
There are three major economic functions of the financial market: price discovery, liquidity and reduced transaction costs. Price discovery in financial markets involves the interaction between buyers and sellers to determine the price of traded financial instruments based on their willingness to buy or sell. Fund providers set the required return, influencing fund allocation. Liquidity enables easy conversion of instruments to cash, crucial for investors' needs. Reduction in transaction costs, including search and information costs, is vital for efficient markets where prices accurately reflect gathered information, minimizing costs. These functions collectively contribute to resource allocation, risk management, and economic growth.
Now let's discuss the types of financial market. Financial market may be classified as follows. 1. Based on tenor of financial instruments traded, which may be money market or capital market. 2. Based on market type, which may be primary market or secondary market. 3. Based on country's perspective, which may be internal, national market or external market. Lastly, number 4. Based on financial intermediation, which may be dealer market or broker market. In summary, financial markets are classified depending on the transactions that are being observed or the exchange that is done, to whom it is traded or the market where it is traded, the manner in which it is traded, and the perspective of the country.
That concludes our discussion on the financial system and financial markets. Let's summarize. Wealth can stem from various sources. The financial system comprises interconnected elements such as lenders, borrowers, financial intermediaries, instruments, markets, regulatory environment, money creation, and price discovery. Financial markets serve as channels for the exchange of funds and instruments like stocks, bonds, and securities among willing parties. They fulfill economic functions including price discovery, liquidity provision, reducing borrowing costs, supporting the primary market, and implementing monetary policy. Financial markets are categorized by traded instruments or tenor, money market, capital market, market types, primary, secondary, country perspective, internal, external, and financial intermediaries, broker, dealer market. That's it. Watch out more for free educational videos by subscribing to